Hello, everybody. My name is Sandy Benhart, and I am one of the two outreach coordinators at TRS. And I will be hosting this webinar today, which will be presented by the other outreach coordinator, Nick Stabler. What we are going to talk about here is it's time to retire. We think that most of the people that are on this webinar are people that are planning to retire at the end of this year. It could be any time in 2025, but most likely in the May or June timeframe. So let me tell you a little bit about what we'll talk about here. We will talk about what the process is, what things you should be doing in order to retire at the end of this year. So if you haven't done those yet, those would be things that you'd want to get started on. And then also what you will be planning to do over the summer and when your checks will begin, that type of thing. One thing that is not covered in this webinar is how to calculate your pension, what types of things go into calculating your pension. If that is something that you need to learn, there's a better source for that. That would be the fall benefit information meetings, and those are recorded and available to you to listen to on our YouTube channel. So this webinar today is to discuss the process and how you will get started on your retirement for 2025. So let me turn this over to Nick Stabler, and he will present the information.
Okay, hello everyone, and congratulations on your incoming retirement. That is very exciting for us. Our job in that process is to make sure that you are completely prepared and know exactly what it is that you need to expect in order to be ready for retirement. So before we begin, this is going to take about 45 minutes. Of course, this is a recorded session, so you won't have the opportunity to interact with us. But you can see near the upper right-hand corner there a link, and if you wanted to jot that link down, that would give you access to the downloadable version of this slideshow. Now, Sandy mentioned that we will be talking about the retirement process, but there's a lot that goes into that, and it starts with the actual paperwork, the actual forms that you need to fill out in order to effect a retirement claim. So we will talk about how to get those forms, exactly what they look like, what to do with them when you receive them, and how to return them. Then we'll talk about claim processing. What really happens once you've worked your last day and all of your forms are in? What's happening in the background here at TRS? We will then transition into more kind of post-process matters like health insurance, post-retirement employment. We'll talk briefly about Social Security and Medicare, and then we'll make sure that you have all of the contact information that you need to actually make contact to go through your personalized retirement interview and to make contact with TRS later on if you need it. So starting with retirement paperwork. Now, paperwork comes to you after you have called and completed a personalized retirement interview, or what you'll hear us refer to as the PRI. This is something that you should do 2 to 3 months in advance of your retirement date. We typically start taking those spring retirement elections on February the 1st. So you can call us on February 1st or after and go through the process of the personalized retirement interview. Anyone who answers the phone at TRS can take you through that process. You don't need to schedule that phone call. Just make sure you have about 10 or 15 minutes that you can be on the phone with us just to answer all the questions that we're going to ask, starting with the verification of your demographic information. Once we establish a claim, you're kind of locked out from making changes to your address or your email online because we've got a claim and we need to know that the information within that claim is correct. So we'll verify all of that with you when you call in. We'll make sure we have a correct date of birth. We'll ask you to send us a copy of a birth certificate or a driver's license if you don't have a proof of birth date on file. We'll verify your mailing address. We'll verify your phone numbers. We'll make sure you have an email address on file that you can still access once you have retired. Typically, you'll lose access to your school email, so we want to make sure that we have a good personal or home email address on file for you. We'll verify all of your service credit, etc., and we'll just kind of talk about all of these things that will be a part of your retirement claim. We will then verify the beneficiaries that you have on file for death benefits. If you need to update those beneficiaries, we will send you that form. In fact, even if you are okay with the beneficiaries that you have on file, our claims department may send you a new beneficiary designation form if you haven't updated since 2021. The form changed, so there's additional information that we may want from you on that new form. We'll make sure that you have paid all balances that are owed to TRS, or we'll make sure you have plans to pay those balances. If you are perhaps paying the 2.2 upgrade cost, or if you are buying optional service credit, all of those balances have to be paid, or you must have arrangements to pay them before we can process your claim. Then we will actually start entering data for the purpose of filling in your retirement forms. We'll start by establishing a claim date or a retirement date. Now, this is a simple matter for us, but sometimes it causes some confusion. So we want to make sure you understand exactly how to determine your retirement date. If you are already at the age to retire, then we'll just typically assume that your retirement date or claim date is the day after your last day of work. So if your last day of work is May 28th, your retirement date with TRS then would be May 29th, unless you are waiting to attain a particular age. For example, if you won't become eligible for benefits until your 55th birthday, which is in July, well, maybe it is that we need to name your claim date as your 55th birthday. It doesn't have to be the day after your last day of work, but in most cases, it's going to be the day after your last paid day of service. Now, we will then start gathering information to complete all of the questions that are on your retirement forms so that when you receive those physical forms to sign, they'll be pre-completed with all of the information that you give us by phone. The first question we're going to ask our Tier 1 members, and Tier 1 members are those whose first Illinois public service occurred before January 1 of 2011. Tier 1 members have something available to them called the Accelerated Annual Increase Program. Now, up to the point that you have had a PRI, we are going to assume that you've had a benefit estimate done so that you know what your retirement benefit will be approximately. And the AAI information is a part of those estimates for a Tier 1 member. So the first question that we'll ask is, are you interested in the Accelerated Annual Increase Program? Now, the AAI program is an optional program that replaces the standard benefit increase for Tier 1 members. So the standard benefit increase for a Tier 1 member would be a 3% compounded annual increase that would begin the January 1 after that Tier 1 retiree attains age 61, assuming that they are under the age of 61 when they retire. If that person is over the age of 61, the initial increase under the standard increase would be the January 1 after their first anniversary in retirement. Now, the replacement, or the AAI program, is an upfront lump sum settlement of those future increases, not an upfront lump sum settlement of your pension. You'd still receive a monthly benefit. You're just saying, I want to take an upfront settlement of my future increases through the AAI. And if you elect that upfront lump sum, then you'd receive no increase to your monthly benefit until you're 67. And at 67, those increases would be 1.5% of your original benefit, not compounded. Now, if you have not already requested or received a benefit estimate that includes that AAI information tailored for you, you've got to do that before you call for your PRI. Otherwise, we'll just do that estimate with you on the phone, and then we'll hang up, and you'd have to call back for PRI after you've had the opportunity to consider your AAI option. Now, you'll note that the question is actually, are you interested in the Accelerated Annual Increase Program? You're not officially electing it by saying yes here. You're just saying, I might be interested. I'd like to have an offer made to me once my benefit has been calculated, and we'll do exactly that. So only Tier 1 members who are retiring by June 30, 2026 are eligible for this program. So if you're retiring as a Tier 2 member, you won't be asked this question. The next question will be, do you want a standard annuity or a reversionary annuity? And this is the first time that a lot of callers have even heard this terminology. So we want to make sure you understand what's being asked here. Now, the standard annuity, which is what is selected by more than 99% of our retirees, will pay you your full earned benefit every single month for the rest of your life. And on your passing, we would then pay a monthly survivor benefit to a dependent beneficiary. If you are a Tier 1 retiree, that monthly benefit after you pass would be 50% of your pension payable to a dependent spouse or a dependent child. If you're a Tier 2 retiree, that survivor benefit is a higher percentage. It's 2/3 of your ending benefit. 66.67% officially in the pension code. But the standard annuity pays you your full earned benefit with no reduction, and then a percentage of that to your surviving dependents after you pass away. Now, the alternative to that is called a reversionary annuity, and the root word there is reverse. So this has you reducing your own pension while you are living in order to provide more than that standard 1/2 or standard 2/3 to your dependent beneficiary after you pass away. Now, this is a fairly rare occurrence. We only process a handful of reversionary annuities each year. Oftentimes, it's because the retiree is either terminally ill or does not have a normal life expectancy in retirement. And because they don't plan on living that long, they want to make sure that they maximize that benefit to their dependent after they pass away. Also, if you have a spouse who is considerably younger than you, and by considerably, I mean, 10 to 15 years younger than you, whose life expectancy, again, would far outweigh your own, well, then maybe you would want to reduce your own pension to make sure that that benefit after you pass away is adequate for them to survive the rest of their own life. If you have a spouse who will have no other long-term income, no pension of their own, no independent wealth, no Social Security income even, if that's your situation, well, again, maybe you would want to consider reducing your own pension in order to maximize or increase that standard survivor benefit after you pass away. But again, very few folks elect this. If you think you might be interested, before you call for the PRI, call TRS for a reversionary benefit estimate, and we can tell you how much you would have to reduce your pension in order to provide X amount to your surviving dependents after you pass away. So call for that estimate. It just takes an extra minute. We just need your spouse's date of birth or your alternate payee's date of birth to calculate that difference in life expectancy. Then we'll verify your last employing school districts. And this is for a couple of reasons. TRS will request current year salary and sick leave from your employers as part of our gathering of data to do the claim calculation. Because the salary, the number of days worked, and the number of sick leave days that you have with that last employer would normally not be reported to us until August when the district makes its annual report. For you, as a May or June retiree, we want to have that information in order to process your claim over the summer. So we will ask for that information from the district, but that salary and sick leave information all goes toward the calculation of your total service credit and your final average salary. And those are the essential elements of that claim calculation. Now, if you've not notified your employer of your intent to retire, that's fine. We will keep your secret for you, but we need to know whether or not your district is aware of your intent to retire. Because not only do we send you retirement forms at the conclusion of this interview, we also send some electronic forms to your district that they must complete after you've worked your last day. We don't want to send those forms if the district isn't already aware of your intent to retire. We will ask you if you have service credit in another public pension fund in the state of Illinois. We call that reciprocal service. That might be service with the Illinois Municipal Retirement Fund if you worked as a teacher's aide or in some other municipal capacity for the public library, for example. Maybe that you have time with the state university's retirement system or the state employees retirement system or the Chicago Teachers Pension Fund. There's 13 public funds, and we can kind of rake that service credit into the calculation of your benefit if you want us to. And so that's why we ask you here, do you have that reciprocal service, and do you want us to include that in the calculation of your benefit? If you'll be receiving a public pension benefit from any other state, for example, the state of Missouri or the state of Iowa, we also need to know this. There is language in the Illinois Pension Code that says that you cannot draw two separate benefits based on the same service credit. So if you are planning to receive a pension from another state, we have to then audit that service that you have with the other state to make sure you haven't purchased your Illinois service into that state or purchased that state's service into Illinois. No double dipping, essentially, is what we're trying to get to. When you tell us your current employer, you need to make sure you let us know if you were a dual district employee. Did you work for one district and coach in another? Or did you render any kind of extra duty for a second district? Any earnings that you had through a regional office, through a workshop, or anything that you had. We need all of your earnings to be reported for that final year on an annual or on a supplementary report form. So you need to tell us every district for whom you will have earnings in that final year. Now, we have everything up to the previous June 30. So if you worked for a second district 5 years ago, we don't need to know that. We just need to know in that final year of service, were you paid by more than one employer? we will ask you if you would like TRS to withhold income tax from your pension. Now, if you say no, that doesn't mean you don't owe the tax. We just want to know if you want us to withhold it, as your employer typically withholds it. So your TRS pension is federally taxable. All of these contributions that you have made to TRS over the years have been on a pre-tax basis. So once you start annuitizing that amount or taking that monthly benefit back into your own pocket, you would have to pay the taxes on that income at that time. You can fill out a W-4P form to tell us that you want an additional amount withheld, or if you just want us to go ahead and check the box for single or married and leave it at that, you can do it that way too. You can fill out a new W-4P form anytime. Anytime you need to make an adjustment, if you were to change your marital status for some reason, that would impact the amount of tax that you would owe for that year. So you'd likely want to adjust your withholding then. So just call TRS for a W-4P form, or you can download that directly from our website. Or you can elect to have no tax withheld. Again, if you elect to have no tax withheld, you still owe the tax at the end of the year. You just have to make sure that you're setting enough aside to pay the government at the end of the year, or the federal government may require then that you file quarterly taxes to make sure that they get their due. Now, if you plan on continuing to live in the state of Illinois as a retiree, Illinois does not assess a state income tax on retired income. So if you are living in the state of Illinois as an active employee, you're paying almost 5%. It's 4.95% of your active income to the state of Illinois as an income tax. When you are retired, you will not have that liability. You will not have that 5% state tax owed. So we don't typically withhold it. But if you would like us to withhold some state tax to cover perhaps some state tax that you owe on another income, we're happy to do that. You just have to let us know, and we'll send you an appropriate form to fill out. Now, if you move outside the state of Illinois, you are subject to whatever state tax law applies in your state of residency. So if you move across the border to Indiana or to Missouri, you're going to owe state tax in that state. In fact, most states in the union will tax your retirement income. There are a few who do not. I always recommend that you call ahead. If you're going to buy a house in Arkansas, make sure you make contact with the Arkansas Department of Revenue and find out what how that state sees your income as a retiree, be it taxable or not. If you would like us to withhold those state tax for states that surround Illinois, we are happy to do that, with the exception of Missouri, who has not signed on to have us withhold. But basically, if you were going to live in Illinois, Wisconsin, Iowa, Kentucky, Indiana, or Michigan, we can withhold state tax as a courtesy and simply submit that to that state's Department of Revenue on your behalf. You'll always get a tax form at the end of the year, a 1099-R form that reports your earnings and shows what was held for federal and state tax. So we are happy to be your withholding agent. If you are going to reside in another state, though, we need you to tell us how much tax you want withheld. We don't know the tax laws in the other states. We just know that if you want us to withhold $50 or 5% a month, we'll help you do that. So we can always help you out with that. If you have a question, just call when you ask for that state tax form. We'll make sure you also know how to fill that out. Now, at the conclusion of the questions, the PRI questions, about 10 days later, typically 10 mailing days, you would receive a retirement packet. And that retirement packet is never going to be more than 3 forms thick. So the most you can receive is 3 forms. Everyone gets this first form, the retirement application. This is the all-important form. This is your written election to begin receiving a TRS retirement benefit. So this form comes to you pre-completed with all of the information that you gave us by phone. You just need to look it over, make sure we've checked all of the correct boxes and that everything looks right, sign it, and then return it to TRS. You can upload these through your online account if that's the quickest and most secure way for you to get them to us, but make sure that you make a PDF of both the front and the back. This is a 2-sided form, so you do need to make sure that you're submitting both sides of that form. The second form everyone will receive, and that is called the direct deposit form or the depository agreement. TRS would like you to use direct deposit. We would like to directly deposit your benefit into your bank account. That is going to be the fastest and most secure way for you to receive your monthly benefits. But if you choose not to do electronic funds transfer or direct deposit, that's fine. We can still mail you a check by the U.S. mail. We would put that in the hands of the mailman, and you get it when you get it. There are always, every month, someone who receives their check by mail calls and says, it's the 5th of the month and I haven't received my check. And We always gave it to the mailman on the last day of the previous month, so we never know where that check is from the time it leaves the comptroller's office. So just please consider using direct deposit. If you're going to use direct deposit, you need to sign this form, as do any joint account holders that you may have. If you have a spouse or your kids on that account, just make sure that everybody whose name appears on the account title signs that application or signs the direct deposit form. Then take that to the bank, to the financial institution. They will fill in the section with your account number and routing number, and then the bank must sign. We cannot accept it without a bank signature. You cannot fill that in on behalf of the bank. We must have the signature of the financial institution in order to direct deposit. This form should be returned along with your retirement application to TRS prior to your retirement date. There's a process called a pre-note process where we do a test transaction for $0 to that named account just to make sure that the account number and routing number are correct. We need time to do that. So don't send that in too close to your retirement date. Again, once you've got your forms in hand, there's really no reason to wait. Get those filled out and sent back as quick as you can. The third form may or may not come to you. If you have at least 8 years of TRS service credit in your claim, you will receive a TRIP/trail participation election form. I believe the form just says TRIP, but TRIP is the all-encompassing acronym Teachers Retirement Insurance Program, and that includes TRAIL, which is for Medicare-aged members. But if you have at least 8 years, you will get this form, although you are not required to enroll in the coverage, but we are required to offer you the coverage if you have at least 8 years of service. Now, this form should be completed and returned to us only if you plan to enroll. If you do not plan to enroll in TRIP, which is for those under 65, or TRAIL, which is for those members who are over 65 and on Medicare, then just shred the form. If you're not going to enroll, you're not giving up your right to enroll. You can enroll later on if you choose to, but if you're not going to be enrolling at the point of retirement, you can just shred the form. There's going to be more information, much more detailed information about TRIP and TRAIL coming up in the next section. Now, I mentioned earlier that there are some electronic forms that will be sent to your employer at the same time, typically, that you are receiving your retirement packet. We're sending those electronic forms to the district, unless you've told us that your employer isn't yet aware of your plan to retire this year. Then we'll withhold those employer forms until you've submitted your signed retirement application. But if your district does know that you are planning to retire in the short term, we will send these electronic forms directly to the district. There are 2 of them. The first is called the supplementary report form. It is so named because that is a supplement to the district's annual report, which I mentioned is typically remitted in August. So we want to have your information as soon after your last day of work as possible so we can get to work on your retirement claim. On this form, the district will indicate your official last paid day, last day of service, the total number of paid days worked in that last school year, that goes to service credit, your total compensation paid during that final year, that goes to your final average salary, and your total uncompensated sick leave days, because that also goes to service credit. So this really completes the data set that we need in order to do this retirement calculation, to calculate your dollars and cents benefit. Now, because these are electronic forms, they are also submitted back to TRS electronically, but that cannot be done until you have officially worked your last day. The district cannot definitively say, this is the number of days worked and this is the number of unused sick leave days remaining until you have officially worked your last day. So they can't submit that in advance. They have to wait until you have worked your last day to remit. Same is true with their other form, which is called the sick leave granting certification. Now, the sick leave granting certification doesn't report how many sick leave days you had. That was on the supplementary report form. This tells TRS whether or not any of those sick leave days reported on the supplementary report form were granted to you outside of the normal contractual allotment. So if your district gives you 15 days every year of your career or every year of your employment, and then in the last the third from last year, they gave you an extra 20 days to make sure you were going to have enough. We need to know that. That is something that has to be reported on this form. That may generate a cost to the employer. So we have to know that. Now, once your forms and the district forms are in and all owed balances, if you owe a balance to TRS, has been paid, then we will start the actual claim process. So once you've worked your last day and those district forms come in, which are usually the last thing we're waiting on, then we'll go ahead and start claim processing. And we have a whole department of retirement claims analysts And that is exactly what they do, is they will process these incoming forms, not only what you have applied for, but what your district has reported, and they will take all of that data and actually calculate that dollars and cents benefit. Now, if you have elected the AAI program, which is that upfront lump sum settlement of your future annual increases, we will then send you an AAI election form. Now, it is on this form that you would make an official irrevocable election to either accept that AAI lump sum or take those future 3% annual increases. So this is where you make an official election for AAI. So you must complete and return this form before we can process your first check. So you would do well to get this form turned around fairly quickly. Any form that you're submitting can be mailed. It can be scanned and emailed. We prefer that you'd actually upload that through your online account if you're going to send it electronically, because then it goes directly into workflow without anybody touching it. But your AAI lump sum is going to be processed as a separate claim. But until we get your definitive election, yes or no, on your regular retirement claim, we can't process your first retirement check. This process takes 60 to 90 days from your last day of work or the last day that the forms come in. So that you would do well to make sure that your part in this process is done pretty expeditiously, that you get your forms turned around very quickly, because that's going to keep that clock running on your 60 to 90 days. Now, once we have calculated your benefit and finalized your AAI election, and we've got everything, all the I's dotted and the T's crossed, then we're going to go ahead and process your first retirement payment. Now, if you retire in May, 60 to 90 days later is going to be August or September that you'd receive that first retirement check. So that initial benefit check or direct deposit is going to pay you retroactively to that day after your last day of work, to your claim date. So if you've had to wait 2.5 months for that first benefit check, then that first check would be for the 2.5 months that you have waited. So subsequent monthly benefits, though, are paid once a month, always on the first banking day of each month, and that continues through the month of your death, no matter how long you live. Now, electronically deposited funds are deposited in your account on the first banking day of each month. So if the first of the month is on a weekday, you typically don't have a problem. Your funds would be in your account that morning, available for your use. If the first falls on a Sunday or a bank holiday, though, you would be delayed until the next business day. So Sundays and bank holidays, there's typically no posting that happens to accounts, so you would typically have to wait till the next day. A Saturday, though, is kind of an anomaly. That's a bank decision. If the first of the month falls on a Saturday, it's up to the bank whether or not they consider Saturday to be a business day for their bank. So it could be you'd have to wait until Monday if your bank doesn't consider Saturday to be a business day. So check in with your bank on their policy there. Benefits are then paid once a month, every month for the rest of your life, as we said, but we pay you on the first of the month as payment for the prior month. So the check you receive on the 1st of September is payment of your August pension. Then you're paid on October 1 for your September pension, November 1 for your October pension, and so on for the rest of your life. The same is true for premiums that are withheld for trip or trail insurance. We're withholding premiums for the month of coverage for which you're being paid. So on September 1, we're going to withhold your August premiums if you were enrolled in August. We'll talk more about withholding trip and trail premiums and exactly how that looks when we get into the next section. Now back to the AAI program for a moment. Once you've made your yes election for AAI and then received notice of your first payment, then we can start processing your AAI claim, which means we need to send you one more form, and that is called the AAI Direct Transfer Rollover Form. This is when you tell us how you want those AAI lump sums paid to you. Do you want to take that as a rollover, as a tax-free rollover to another plan? Do you want to take that as cash with the tax withheld, or do you want to do a combination of the two? We can do anything you tell us to on that form. If you elect to have any portion of that lump sum paid to you directly as cash, essentially, or a check made payable to you, we have to withhold 20% for federal tax. Okay, we have to. It's the rules. It's the IRS rules. If you want to roll money over to another qualified plan, like your TRS supplemental savings plan, your 457B, or your 403B through your district, or your IRA, you can do that. You just have to have the plan administrator for that plan fill out their portion of the form, and then we'll issue a check directly to that plan on your behalf. You can also do a combination of the two. The average of AAI lump sums is about $150,000 per person. If you wanted to take $20,000 out and take a fabulous, retirement vacation with your kids and grandkids, take a cruise or take everybody to Disney, great. I encourage you to do that. But if you take $20,000 payable to yourself from that 150,000, we have to withhold 20% of that $20,000. So we'd write you a check for 16,000, and then you could roll the other 130,000 over to your tax sheltered plan or your other qualified plan. So we can do a mix of the two. It's going to be whatever you tell us to do on this form. All AAI payments, all lump sum payments, are issued by paper check, and they are sent by U.S. mail. Even that $100,000 check or $150,000 check that goes to your 403B administrator or to the TRS Supplemental Savings Plan at Voya, that's going to go as a paper check by U.S. mail, first class. So it's just the policy, and that's how it has always worked, and it really does work very well. Checks are fairly secure. Most banks aren't going to deposit a $150,000 check into the wrong person's account, so you can rely on that process. AAI elections, as I mentioned earlier, are irrevocable. So if you decide after you have your claim has been processed that maybe you wanted the 3% increases instead of that upfront lump sum, well, at that point it's too late. So make sure you know what you want to do for your lifetime by making that yes or no election on the AAI election form. Now, if the AAI has been elected, keep in mind, you're not going to see any change to your monthly gross benefit until the January 1 after you turn 67. That's when you would start receiving those 1.5% increases if you elected yes on the AAI. If you download these slides, there's some supplemental information, some good extra info about AAI and some other topics in the appendix slides that we don't go over in this video. But again, if you download the slides, you would have access to all of that information, or you can always call with questions. Now, sometimes after you have officially retired and you got that first retirement check, you might get some surprise mail that is an excess contribution refund application. There are a number of funds from which you may have overpaid, and it could be that we owe you some money back on those excess contributions, and those are called ECRs, or excess contribution refunds. So once you've officially retired, if you are owed anything, TRS will automatically send you an excess contribution refund application for either the 2.2 upgrade program, if you have paid your upgrade cost and then you get those forgivenesses based on how many years you've worked after 98, well, maybe you've overpaid your 2.2 and we owe you some of that money back. Additionally, back in 2016, we saw the end of a long-standing early retirement option program for which you had made some contributions from 2005 to 2016. A lot of folks have already taken their ERO sunset refund, but if you haven't, we will send you an excess contribution refund application to get your ERO money. And that would look just like the 2.2 upgrade form, but it would say ERO sunset refund at the top. If you are an individual who indicates on your retirement application that you have no dependent beneficiary, if you have no dependent spouse and no dependent kids, you are eligible for a refund of what you have contributed throughout your career to the Survivor Benefit Fund. 1 penny of every dollar you have earned as an active member has been set aside for the purpose of paying a future survivor benefit. But if you do not have a dependent spouse or a dependent child who would benefit from a monthly benefit, you are invited to take that money out if you choose to. If you leave that money in, it would be paid as a lump sum on your passing, and that is entirely your choice. But if you have no dependent beneficiary and you have indicated that on your retirement application, we will automatically send you that 1% survivor benefit refund application. It looks, again, much like the other excess contribution refund form, so you may get several if you have several lump sums available to you. But again, we will send these applications to you automatically. You do not need to call and ask for them. Most of these amounts are taxable, so you would want to consider again whether you want to take those taxable refunds directly to yourself minus 20% or roll those monies over to another tax shelter. You have the same options as you do for any taxable lump sum, as we explained in the AAI section. These refunds, like the AAI, are paid as paper check by the U.S. mail. So you would get those checks by mail. You could either deposit that in your bank, or if you have elected a rollover, you'll get that check, or you will not get that check. That'll go directly to the administrator of your 457B or your 403B. Okay, we're going to change gears here and talk more about health insurance. We promised that there would be much more detailed info about TRIP and TRAIL in the next section, and here we are. So these acronyms, TRIP and TRAIL, stand for Teachers Retirement Insurance Program. That is the umbrella term for all of the plans that are offered to TRS retirees and their dependents. TRAIL is a subset of TRIP. That is the Medicare Advantage program for those members who are TRS retirees already on Medicare. So we're going to talk about both of those. Eligibility requirements for those two programs are the same. 8 years of service with TRS entitles you to membership in TRIP or TRAIL as a retiree. So as long as you have at least 8 years of service credit, you have lifetime access to TRIP and TRAIL. Now, if you are enrolling as a new retiree, you would fill out that TRIP participation election form that we mentioned in the retirement paperwork slides. But you don't have to enroll at that time. You have at least one annual opportunity to enroll in TRIP or TRAIL, or you can come on when you lose your other coverage, or you can come on during the open window for new enrollment in Medicare. So you have the options of when you retire, when you're losing your other coverage. For example, if you have spousal coverage and that spouse retires and you lose that coverage, well, you'd be welcome onto TRIP or TRAIL then when their coverage ends. Or at 65, typically, when you become eligible for Medicare, or there's an annual benefit choice period for both of these programs. It would just swing the door open for you, no questions asked, and you'd be welcome to join TRIP or TRAIL during that annual benefit choice period. If you have a dependent who would like to enroll in TRIP or TRAIL with you, they are welcome in at the same opportunities that you have for yourself. Now, regular TRIP, which is what our members use ahead of Medicare age, is available, again, to any member who chooses it and has at least 8 years of service in our system. TRIP offers a number of different carriers. Those carriers might be HMOs, open access plans, or PPOs. An open access plan or an OAP is an HMO PPO hybrid. That's why we put it right there in the middle. It has kind of the benefits of both plans, but it is considered managed care, so it would be at the same premium as an HMO. TRIP is, for most of our members, their primary coverage before they turn 65. If you did not elect to enroll at the point of retirement, May is your open enrollment period. The month of May every year would give you the opportunity to submit a TRIP participation election form for coverage to begin on July 1. So if you elect during annual open enrollment, July 1 would be your start date. Prescription drug coverage is included in every TRIP or TRAIL plan, whether you're on HMO, open access plan, PPO, or Medicare Advantage. Prescription drug coverage is a part of that coverage, as will dental and vision be a part of these programs. It's already started with TRAIL, January 1, 2025. Dental and vision was added to TRAIL coverage. It will be available in the 25-26 fiscal year, starting July 1, 2025. So most of you new enrollees who are coming on July 1 or later would have dental and vision coverage baked into your TRIP coverage as well. And as I mentioned in the last slide, if your dependents want to come on, they are welcome in, but you would want to make sure that you were prepared to make that premium payment. We'll see those premiums here in just a moment. Now, TRAIL is the subset of TRIP for those who are over the age of 65 and on Medicare. It could be that you'd qualify for Medicare earlier than 65 if you had some special circumstances, but you'd want to check in with Medicare. We use 65 as kind of the generic enrollment date. If you think you'd apply for Medicare earlier than that, you would become eligible for TRAIL as soon as you have Medicare Parts A and B. Now, there is a separate open enrollment period for TRAIL that is in the fall. October 15th to November 15th is typically the open enrollment period. It just kind of depends on where the weekends fall as to whether or not that's adjusted by a day or two. But January 1 would be the effective date of TRAIL coverage if you're electing during that open enrollment period. Typically, TRIP and TRAIL takes effect the first of the month after other coverage ends. So as a new retiree, a lot of districts will cover you through the month that they pay you. So September 1 is a popular start date for new TRIP and TRAIL enrollees. You can enroll in these plans throughout the year. It's just that open enrollment period that would dictate a July 1 or a January 1 start date. Again, prescription drug coverage and dental and vision are baked into TRAIL as well. TRAIL is a single carrier program. It is a Medicare Advantage prescription drug program, PPO. So you can see any doctor or hospital that accepts Medicare. That's your network on the MAPD or the Medicare Advantage plan. So these are your offerings We want to make sure we highlight some additional information. And again, that is that your enrollment initially is typically the day after your last day of coverage with that other plan, either with your district coverage or a spouse's plan. Trip Trail can only start on the first of a month. So it is typically the first of the month following your retirement date. If your district is going to cover you as a summer payee, if they're paying you in June, July, and August, and they want to cover you June, July, and August, that's fine. You still need to remit your participation election form within 60 days of your retirement date, not within 60 days of your enrollment date, but within 60 days of your retirement date. Now, Trip and Trail are not administered by TRS. We do determine your eligibility because we have access to your service records. So we know whether or not you have the 8 years that are required for enrollment. And if you do, we're going to send you that Trip Trail participation election form as part of your retirement packet. Now, the state of Illinois, through its Central Management Services Agency, is the plan administrator. They actually coordinate the carriers and the rates and the benefit levels and premiums. So these are all done through the Department of Central Management Services, who has hired a third party called the My Benefits Service Center to actually handle your enrollment. So while you will send your participation election form back to TRS, we simply enter that information into the big trip computer, and then you would deal directly with the My Benefits Service Center to elect a carrier, to elect to add dependents, to provide documents proving your dependents or proving your Medicare eligibility. That would all go through the My Benefits Service Center. Now, TRS does have one additional job. We are the withholding agent for your premiums. So I mentioned earlier that we would withhold premiums a month in arrears for this coverage. So I will highlight here that if you have a September 1 coverage effective date, your September 1 check from TRS is paying you for August. So you would not see a September 1 premium deduction if your coverage begins on September 1. You would see that deduction from your October 1 check, where we are paying you your September pension. Now, here are those premiums. I think you can see my mouse, so I'm going to just highlight a couple of these numbers or circle a couple of these numbers. These are current numbers. These are through June 30 of 2025. So this is current plan year. This does not yet include dental and vision. So these premiums would be a little bit higher as that dental and vision coverage will be added to this coverage effective July the 1st. So you'd see these numbers go up a little bit every year, but a little bit more so this year because of that additional coverage that's being added. So right now, most of our new retirees are in this category that I'm circling. They are under the age of 65. They are not yet on Medicare. So if they choose a managed care plan, which would be an HMO or an open access plan, they would pay $347.20 per month for just themselves, for just the retired teacher on that managed care plan. If they instead elect the PPO coverage, which is more expensive, just for the member, $810.30 monthly. But again, we want you to look at all three programs. When you get your retirement packet, it'll have that trip summary brochure that has a coverage comparison chart. We want to make sure you understand the differences between the types of plans, in particular, the differences between the open access plan and the PPO plan. The open access plan, as I mentioned earlier, is an HMO PPO hybrid. So you can still see doctors who are out of network on the open access plan, but you pay this lower managed care premium. The PPO coverage is $810.30, which is more than twice the $347.20. And that may be another factor that sways you toward that cheaper coverage, but we just want you to understand exactly what your options are. Now, if you plan to add a spouse or dependent kids, their premiums are a la carte. There is not a family plan on a retired insurance plan. So if we're talking about enrollment as you, the member, in the open access plan or HMO for $347 monthly, and you want to add a spouse, that spouse is in the same column age-wise, $1,388 to add the spouse. That's in addition to your $347. If you have a dependent child under the age of 26 and you want to continue to insure them, that child is an additional $447.26. If you have twins, double that. Because the $447.26, like the $1388 and the $347, is an a la carte premium. So there is no family plan. You're going to pay a premium separately for each person that you choose to enroll. Premiums on the spousal side or the dependent side for the PPO, again, are double that PPO premium. $1,620 to add your spouse to the PPO, $580 a month if you add a dependent child. Now, once you attain age 65 as the member, if you don't have any dependents who are still on regular trip, then you can move yourself over to Trail. Trail being the Medicare Advantage program that is a part of TRIP. Now, you'll note that these premiums are considerably less. You were paying $347 a month for yourself. You move over to the managed or to the Medicare Advantage plan, and it's $7.35. So that replaces your $347 premium when you turn 65. This already has the Medicare, or excuse me, the dental and vision coverage baked into that premium. So if you have then also a Medicare enrolled spouse, the spouse then would be $27.14 instead of $1,388 or $1,600 and change. So it's considerably cheaper to be on the Trail program because Medicare is paying, they're picking up most of your liability. So your cost to be on the Trail program is considerably less. Now, if you have a spouse or child who is still not yet on Medicare, well, then you would have to stay on this chart. You would just move over to that Medicare primary column. I'm pointing at my screen. You can't see that. Sorry, I'll move my mouse to show you that there's a Medicare primary column here. So if your spouse, for example, is a little older than you and that spouse turns 65, they can't move over to Trail just yet because they have to be on the same plan as you right now. So if you're still under 65, but your spouse is over 65, well, spouse will just move over from 1388 to 472 a month. You keep paying your 347 for yourself. And then once you turn 65, you'd both hop over to Trail together and save that big money by moving into Medicare primacy, the both of you. Okay. You'll notice that that phone number is there if you want to jot it down, but that will also be at the end. That My Benefits Service Center, they administer, again, enrollment. So if you were going to add a spouse or any dependents, they would be the ones to help you do that and collect proof of dependency, those documents. Okay, let's shift gears again and talk about post-retirement employment. So we don't just allow you to continue working in a TRS covered position as a retiree, we fully encourage it. Now, there are rules that are set forth in the pension code. So you do have to abide by these rules before you return to service in a TRS covered job. The one highlighted in red there is at the top for a reason. You must be in receipt of your first TRS pension check or direct deposit from TRS in order to be considered retired. You cannot return to TRS covered work before you get that first retirement check. If you do, well, you are moving your last day of work prior to retirement, which means you're going to give up those summer benefits by returning to summer school or by returning to sub before you've received that first TRS retirement check. You do not want to do that. That's going to be very costly to you. So you're going to meet these next couple of criteria while you're waiting for that first retirement check, which again typically takes 60 to 90 days for TRS to process. So you cannot work in a TRS covered position until the new legal school year begins, which is July 1. So if you're done at the end of May, July 1 is still going to fall within that TRS processing time. So you're going to meet that criteria while you're waiting for your first check. There's also a rule, this is an IRS rule, that says that you may not return to that last employer for 30 days. If you want to be considered a retiree for tax purposes, you have to have a 30-day layout period from your employment from that last school district. You're also going to meet that criteria while you're waiting for that first TRS pension check. We should also mention that you should not pre-arrange. You cannot pre-arrange post-retirement employment with that last employer in writing. So do not sign a post-retirement employment agreement. You can talk about your post-retirement plans with your district if you want to. Just don't sign for post-retirement employment until you've received that first pension check. TRS is then going to just monitor the number of days or hours that you're working in a TRS covered job. Presently, that limit is 120 days per school year, and that school year runs July 1 to June 30. So you can work up to 120 days per school year. If you're working just a few hours per day, less than 5 hours per day, we'll just count those hours toward a 600-hour limit and convert your whole days to 5 hours each. That's the way to stay under the limit if you're working some whole days and some partial days. Now, this is a law, so that law could possibly change. The permanent law on the books says you can work 100 days per school year or 500 hours per school year. We're currently operating under an extension of that, which gives you up to 120 days or 600 hours per school year. And that is good through June 30 of 2026. Now, reciprocal service, if you have retired reciprocally, for example, with TRS and IMRF, you need to be aware of what is the post-retirement work limit for that other system, for IMRF or for SERS. Because if you are retired reciprocally, meaning if we combined your service credit and your IMRF or SERS credit, for example, in the calculation of your retirement claim, you are held to the post-retirement work limits of both systems. So if you are TRS and IMRF retired, and then you exceed IMRF's post-retirement work limit, both of those pension checks are going to stop. Your TRS benefit and your IMRF benefit checks would stop until you re-retire. Now, if we have any Tier 2 retirees listening, you have one additional layer of consideration. Under the law, a Tier 2 retiree or annuitant, as you are called in the law, cannot return to full-time public employment under any one of the reciprocal systems in Illinois. So Tier 2 makes certain that if you accept post-retirement employment, that it is part-time work. Now, we do not limit what you do outside of TRS covered work, Tier 1 or Tier 2. We don't limit what you do in other states, even in the public school system of another state. We don't limit what you do as far as private sector employment. If you work in the private schools, you want to go greet at Walmart, you're welcome to do that as much as you want to. We do not limit any work other than your TRS covered work, and we never limit your earnings. You can make as much as a retiree as you are willing to earn. So you're never limited in how much you can earn as far as TRS is concerned. Now, that post-retirement employment, as I said, that is dictated to us by legislation. So we want to make sure that you are aware that this 120-day or 600-hour limit is only good for the first year that you will be retired. That is only valid through June 30, 2026. Beyond that, we don't know. We don't know if that will drop back to the 100 days or 500 hours, or if the legislature will extend the 120-day, 600-hour extension. Or if they will raise that even higher. A couple of years ago, they raised it to 140 days or 700 hours just for the last couple of months of that fiscal year. So this is all dictated to us by legislation. So just stay on top of that. You don't want to exceed post-retirement work limits. Again, your pension check stops. And if you exceed that limit in the first year of retirement, you owe us all the money back. We have to unwind your retirement claim, and you'd owe us every dime back. Yes, even the taxes that you already paid. So just make certain that you're staying under that 100 days or 600 hours. Here's a brief explanation again of how you would calculate the limit, or how you'd make sure you're staying under the limit if you're working partial days. Sometimes folks will call and say, well, what if I'm working half days? Well, there's no such thing as a half day. You're either working 5 hours or more, and that's a day, or you're working fewer than 5 hours and you just count your clock hours. So there's no such thing as a half day. If you divide your 600-hour limit by 180 days, I think you can work 3 1/3 hours or something every day of the school year. So you can apportion those 600 hours any way that you want to. Just remember, if you're working 12 hours in one day, you just count that as 5 hours against the 600-hour limit, and then count your actual clock hours for days that are under 5 hours. Always call if you have questions. This is not one you want to get wrong. Again, we have had folks who have ended up unretiring unwittingly, and they've owed us back a lot of money. Okay, Social Security and Medicare. This has been a fairly hot topic this year because we saw finally some change to federal legislation. So we just want to make mention here that change on the Social Security side, which was the repeal of the windfall elimination provision and the GPO. That's the government pension offset provision. I'll pause here as I know you're all applauding. But basically, that did not change how TRS does business. TRS has never reduced your benefit. It was that Social Security benefit or that spousal benefit from Social Security that was impacted by those laws. So now that those laws have been repealed, again, we still have to defer your questions to Social Security, who can tell you if you're qualified for a benefit, and if yes, how much. But there is no negative impact on your TRS benefit for anything else that you're receiving. Medicare is a Social Security program. So when you get close to 65, you'll need to make sure you are qualified for Medicare, and you would call Social Security for that. And if you are, then you would apply through Social Security for that Medicare card. That does not come through us. And we actually have no access to your Medicare eligibility. We don't know if you qualify, which is why we make you send us a copy of the card when you enroll in Trail. Okay, we're all of a sudden at our last slide of the show. This is the contact information. We want to make sure, not just for PRI purposes, but for the rest of your life, that you know how to reach your pension system. We are your partner for the rest of your life. We are going to be your income source for the rest of your life. So we want to make sure you know how to reach us. We are available toll free at the number shown there next to the phone icon, Monday through Friday. This says 8:30 to 4:30, but we have very recently started opening early. 7:30 is when you can now reach us. That's great for you PRI folks because you can get that done before school, hopefully. Otherwise, just give a call when you have 15 or 20 minutes to that phone number, and we will take you through that claim setup step by step. And so you'll know exactly where you stand when you call. You can also visit us online at trsil.org. That is our web address. You can go through the PRI online, but you're going to lack that live support that you get from a counselor or a member services representative. Very often, if we have courtesy calls or follow-up calls that we have to make to clarify information in the PRI, it's because that person went through the PRI online. So that honestly is probably not going to save you a whole lot of time, and it's probably not going to save you a phone call. So definitely take advantage of our expertise, call in. We have 14 member service reps, and I think 16 counselors total between the two offices who would answer the phone. And any one of us is excited to take you through that process starting February 1. Email address members@trsil.org. If you have a question, but you don't have time to call during the workday, certainly send us an email. A benefits counselor mans that box. So we would be able to get you a counselor written emailed response, typically within 1 business day. And of course, we're on all the socials. We're on Facebook, we're on X, we're on Instagram, and we also have, as you are probably already aware, a YouTube channel. You may be watching this video through our YouTube channel. There's also what's called the What's Next webinars coming up once you've officially retired, typically in the months of June and July. We hold a separate set of webinars for our brand new retirees, and we could dig into some of these things a little bit deeper. Taxes, health insurance, post-retirement employment, death benefits. It all becomes a little bit more relevant, and you've got a little bit more time to focus on it once you're officially retired. So as a new retiree, watch your email for an invitation to that What's Next webinar over the summer. Below that, we have some helpful numbers as well for the TRS Supplemental Savings Plan. If you are enrolled in the SSP, and you want to use the SSP to receive your rollovers from your excess contribution refunds or your AAI, that is the contact number there. Just next to that, we have the Trip Trail line. That is the My Benefits Service Center, 844-251-1777. That's going to ring into their call center. They would, again, be the ones to handle your enrollment in Trip or Trail. That's the number you call to elect a carrier and to elect to enroll your spouse and to provide your Medicare card or to provide your spouse's birth certificate to prove that spousal relationship. We're going to leave this one on the screen for the remainder of the webinar. In case you haven't yet downloaded these slides, we encourage you to do that. That's at our website, trsil.org/time-to-retire. And that'll get you the takeaway. But anytime you have questions, anytime there's anxiety about the process, anytime you have a nightmare and you think this has got to be a dream, there's no way that they'll pay me to not work, give a call, and we will be the antidote to that anxiety, and we will reassure you. That's really our job. So please let us know as you have questions or need absolutely anything through that process. Sandy has rejoined. Sandy, did you have anything that you wanted to impart?
I will just comment, of course, great information, Nick, and reiterate that once you get through this process and you take a break in the summer, you've cleaned out your room, you had your retirement parties and such, we will know at that point that you did put in for retirement. So you will get that invitation that Nick mentioned for what's next. Do be sure that at that point you have changed your email address to a personal email. You will probably be turned off from your district email, and actually that's a good thing because you don't need emails from parents or anything like that anymore anyway. So just switch that to a personal email, and then once you are done and out of school, you will be getting that invitation to us just to double check and be sure that you did everything you needed to do. But other than that, congratulations, everybody, and look forward to the next chapter.
Thanks, folks. Happy retirement.